Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Grains inning mixed on Thursday. Livestock to the plus side. John Heinberg is in with analysis. We did have a nice pop in soybeans on Thursday, John, pushed by soybean oil and some biofuels news, right?
Yeah, that was the big driver of the day in the soybean market, was just the announcement that we're going to see those biofuel blending mandates come together here, very close to where they were anticipated back in the fall. So we saw some selling pressure in that soybean oil market in December when they said they were going to push the deadline back. So today we kind of recovered all that ground we lost in terms of that window back in December. There was some conflicting news regarding the imported feedstocks and imported biofuels. So it does sound like there is still going to be some restrictions there. So I think that also helped support the market as the day went on, knowing that the U.S. supplies are going to be the main source of those fuels or feedstocks for U.S. blending fuels. So that was the encouraging side of it today. Would have liked seeing a little bit stronger close in the soybean market.
Yeah, and we also got a good export number, didn't we, on beans?
Yeah, that was a really solid week in terms of bean sales, over 2 million metric tons for the week. And China obviously was very active in the soybean market. On top of that, you get a nice round of announced daily sales on Thursday morning as well. So just kind of showing that U.S. beans still are a little bit of a value and in demand here.
Absolutely. And there's a lot of questions about China's getting close to their 12 million metric tons. Will they keep buying after that with big Brazilian supplies and lower prices coming at them?
Yeah, that's going to be the big question, or the elephant in the room per se. And, don't forget, they are supposed to pick up 25 million metric tons next year, and, this year, next year, and in that regard. So do they get their 12 done and keep buying? That's something the market's going to be watching extremely closely. CONAB did reduce the soybean crop slightly, down 1 million metric tons on their numbers this morning, down. So again, reflecting some lower yields, maybe some impact, some of the drier weather earlier in the season. We're still also in that key window of finishing out that crop in most regions there. So that's something maybe the Chinese have been stepping into the market to make sure they're getting some, ground covered just in case. So a little nervous that some of these late sales like this, they're set scheduled for late spring delivery, could turn into some cancellations if that Brazilian crop stays together. But again, we'll cross those bridges when we get to it. So at least right now in a market that needs some demand to help push prices higher, it's good to see some numbers come at us like that.
Yeah. Well, CONAB at little over 176 million metric tons for Brazil. We've heard a lot of numbers that have been higher than that, but at least we're going the right direction. We also got strong NOPA crush figure again, didn't we?
Yes, we did. Another record crush for the month, as well as one of the largest numbers on the books. Highly anticipated by the market, just a little bit above expectations, so it didn't really have a major market impact today. But again, it's just to know that that domestic crush is going to continue to be a major support point for U.S. bean demand. So that may have been some of the factor too, helping out the front end of the contracts on Thursday as well, is just the fact that domestic crush continues to stay at a very strong pace.
Do you think the low is in the soybean market, as those October lows, will they hold or not?
Last year we put a low in the April window. You're still looking at a Brazil crop, even though the reduction was there. It's still a record and above last year's, totals in that regard. So we had a hard time digesting that big pile of beans last year. So unless we see something dramatically happen, U.S. beans are still about a 60, 70 cents a bushel on just terms flat numbers, not counting freight, over top of the Brazilian contracts and Brazilian bean prices. I think as we get into that bulk of harvest, you could see that demand window really close quickly. That'll be the key. And if that's the case, then U.S. beans are going to go try to find that demand again, or at least get competitive with those Brazilian beans. Again, we've seen that the last couple of springs, because that, the soybean side of it, Brazil controls the world market with the largest supply and the price. And obviously when they're in the middle harvest, it's going to be very difficult, barring something extreme happening, for U.S. beans to really get some footing.
Disappointing day on Thursday in the corn market. Did we hit resistance, or was this the record Argentina corn estimate?
I think it's a combination of the two. Obviously, when the Rosario Grain Exchange came out, put that Argentina crop up to 63 million metric tons. That's about 10 million metric tons over where the USDA is. And you calculate that into the global supply picture, which is friendly, in terms of multi-year lows of supply and stocks to use, but it adds just more to this pile on top of the big adjustments, obviously, in the U.S. crop here to start the week. So I think that weighed on the market. I think the 425 area on the March contract must be triggering some selling points for producers or some people that just need to get corn moved. We failed there 2 days in a row and then finishing at the bottom end of the trading range today. Watch this 420 level. That's an area that some reason on charts just seems to kind of hold prices. I think if we can close under there through the end of the week, that might be kind of a disappointing close going into next week. We'll have to see. The other side of it is money flow right now. The funds were fairly neutral going into that USDA report. Obviously, have been aggressive sellers since then. We've seen open interest jump up with new money flowing into the short side. This might be a window just because of the supply. Even though the demand continues to be good, they may just want to push things here with a new short position.
Yeah, how short do they go in this market? Do they push us back down to those August lows or not?
I think that's definitely the first target point is those August lows in that regard. Unfortunately, because of the supply picture, there's some targets that are even softer below that. Not sure if this is the window we go get those, but that may be something we look at, especially as we get into that March basis contract pricing window, the end of February, first notice day. We've seen some strong selling actually the last 4 years. From February high to March low, we've averaged about a 63-cent drop. So that's an area I'm really going to be watching because it's the point where the market knows those bushels are coming and they kind of hang people out to dry, especially if they're holding on to basis contracts or price later type contracts.
Well, corn and wheat anchoring each other lower here, but the wheat market, biggest problem there is just we have too much wheat. Is it that simple?
I think it's that simple at the first point. Again, global wheat supplies are running relatively heavy and strong. And, again, we've had some concerns regarding what's going on in the Black Sea region and things happening between Russia and Ukraine. Does that continue to kind of escalate? That could be one of the little underlying factors. Obviously, here in the United States, we're focusing on what's happening with the KC wheat crop or the winter wheat crop, in terms of dormancy and as this crop starts to get through the winter. So those are a couple things that have been supporting the market here. But again, in the overall supply side of it, that is just the pressure the market has to work through.
Are you already talking to producers about acreage decisions for 26? Because right now, is there anything that looks like it's even going to be profitable at this point?
Obviously there's not a lot of meat on the bone, if any, in some of these crops. And talking with producers about next year, especially after Monday, that really was a deflator. You could just feel that talking to the clientele of how disappointed they were with that price move, especially in corn. Everybody was hoping for just one more little push to get some sales in, things of that nature. In a seasonal window, we typically get it, and that was pretty deflating. As we start looking to next year, you still hear a lot of chatter of corn on corn becoming a factor. I think corn acres could stay at a fairly heavy clip, even though the input costs are so high. Producers just seem to like the reliability of the corn side of the equation. And again, there's still some potential, but the global numbers where they are, that anything were to happen to the U.S. crop, prices could see some pretty aggressive move, but you got to plan accordingly and not, count on disaster of some form. So at this time frame, but I've been getting producers going on 26 at this time frame. Let's start locking in some cost coverage here in terms of those inputs. Get your toe in the water because the last handful of years, this January, February window was one of our best pricing opportunities.
Cattle market up today. We keep hitting new highs for the move in the feeder cattle futures. We kind of get stalled up at resistance in the live cattle. Do we get to those areas with the help of cash, you think?
I think cash trade will be the definite driver over the next couple of weeks in the live cattle market. Nothing's really coming together so far this week, so pretty slow in terms of the trade. We'll definitely get some numbers maybe later this afternoon, definitely into tomorrow. We'll see where cash trade goes. If we do see firmness, I think that sets this market up for another nice push. Obviously, the feeder market continues to be red hot. Cash prices at the sale barn continue to be very, very supportive. Throw in cheap corn on top of that, brings those input costs down as well. So you're looking at a market here in the live cattle market that's another set of consolidation mode. Wouldn't surprise me if cash is disappointing. You see that February contract pull back a couple dollars and retest some support. But we're moving into a window. Maybe supplies get even tighter. That's something we've been talking about for a while. I think it could set this market up for a retest. If we get a technical breakout up into that 240 area, maybe even a touch higher if the cash market wants to follow.
Right. We are going to get into the tightest supplies here in the first quarter. It's just a matter of when, right?
Yes, very much so. And that's, again, something we've been talking about for quite a while. You saw carcass weights continue to be heavy at this time frame, as the packers are aware the supplies are going to get tight. So they're trying to get as much meat in the cooler as they can. Maybe that's something what's going on in terms of the cash market being so quiet the last few weeks in terms of activity. So it's the fact they want to get some bigger cattle, slow the chain down a little bit here. So we got some more cattle to work through this hole.
And hogs, you're seeing a sharp breakout here, especially in those summer months up into contract highs. Is this all fun buying, or is there something fundamentally pushing it?
Well, at least on the front end, the nice breakout got through trend line resistance here today. Saw the money flow into that market. Nice jump in direct cash prices here today as well. And obviously, that's something I've been watching as that front end of the market's kind of calmed down here, rolled. Looked like it was getting a bit tired and needed some wake ups in the fundamentals in terms of cash and retail values to get into the leg. Looks like maybe we're getting that here. So, but at the same time, when you get these quick moves in the hog market, they like to quickly go the other way with V tops or V bottom type operations. So obviously something the producer needs to be focused on. Those summer months, again, same type of thing, was looking for a breakout opportunity. You got some disease pressure out there. We'll have to see how things are going as winter continues to move along. That could be tightening up those hog supplies, but a nice tactical move today in those summer hogs. Maybe get back into that 110 area in June, July. That'd be an area that, again, we want to make sure we're building some floor.
Absolutely. Those are some pretty nice prices for summer months. All right. Thanks so much. John Heinberg with Total for Marketing. That's Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's you were right. Should have gone with Brevant seeds. When you choose Brevant seeds, you don't just win, you get to be right. Don't just win, win. Talk with your retailer or visit Brevant.com/win to get started.